Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, Paul speaks with Greg Peters, CEO of Zilliant, a leading pricing technology provider, about the state of play in pricing optimization and the impact of big data on middle market companies.
So, Greg, if you wouldn't mind, maybe start off with giving folks an overview of Zilliant.
Sure. We help B2B companies, so we're completely focused on the business-to-business segment of the marketplace, and we help companies use their existing data to give guidance to their sales force to improve pricing and to help their sales force close more deals. So at the end of the day, we use advanced science to optimize data for specific purposes around pricing, around cross-selling, and around growing market share for our customer base.
So clearly there's an element of analytics there. There's an element of execution there. As we did a story on this in December. Actually, we interviewed one of your folks, Barrett Thompson, I believe is his name. But sort of what I gathered from that is there's sort of three levels of this. There's analytics, which is more of a backward-looking activity. There's execution, which is getting the information and the right parameters to the salesperson real time, or as close to real time as possible. And then third, there's kind of the optimization, which is saying, given all these variables, obviously you know this, given all these variables, this is the right range for you to be pitching or negotiating. Do you sort of, first of all, do you agree with that broad assessment, and does Zilliant sort of approach all of those in its offerings?
I mean, I think that is particularly in the pricing space. That is a traditional way that I think the market has looked at it. I guess I look at it a little different in that I think we're in the business of giving answers, and we don't want salespeople, looking around in analytics trying to find the answers to their questions. We want to proactively give them the answers to their questions. I used to be CFO in my past life, and as a CFO, you can't make every financial decision in the company, and I always felt that it was my job to get the right systems in place so that if people had the right information at the time that they need to make a decision and they can understand that information, that 9 times out of 10 they're going to make the right decision themselves, and that's a much more efficient way of kind of managing and running a business. And so we've taken that, I guess, to the solutions that we offer. And so the way that translates is, let's take in our pricing optimization solution, which is called Margin Max. We optimize prices for specific products, specific markets, specific customers, and as a sales rep is going to quote and price a deal for that particular customer, we infuse that answer directly into the quoting application or whatever execution system that they're using to get that pricing to that customer. We just implement and drive those answers, those pricing answers directly to those applications. We have another application called Sales Max, which is really around driving leads into a company's installed base for cross-sell or for finding opportunities where customers may be starting to buy competitive products. Again, we optimize the data specifically to answer those specific questions, and we infuse those answers directly to the sales force via email or via their CRM system, so that they know if they're going to go make a call on customer ABC, they know that there's a cross-sell opportunity for product XYZ and products DEF to go sell them additional products that companies that are just like them are buying products are buying those products in similar circumstances, and they should be too. So, I guess I look at it as as our core competency is getting data, doing something really smart with that data for a specific purpose, and infusing the answers for that purpose directly to those individuals that can make decisions and make something actionable in the field.
Right. It's interesting in this field. It's always been very interesting to me as to where what data you get and where you get it from. Because in the B2B space, and clearly that's a tough nut to crack. You can get data from the company that that is using your product or service. But are there external forces where you can get data in B2B transactions that can be used to crunch the numbers, using the algorithms that I'm sure you've got?
We use both. We can do it. The secret sauce, if you will, that we uncovered, probably 6 or 7 years ago, was the ability to determine price elasticity without lost data. And that's kind of the key in B2B. Salespeople do not input lost data into their CRM system. So all you have is the data from customers that were closed.
Right.
And our ability to determine price elasticity out of that data has opened up a huge opportunity for us and for our customers to, in essence, start to design and to drive their business directionally where they want it. For certain segments of the business, they may want to drive market share. For certain segments of the business, they may want to drive margin, and really give them the dials and knobs, if you will, to really drive their business where they want to go it. If they have external data, that certainly can be very beneficial, whether it's external kind of overall market data that helps guide how much market share that they have overall, whether it's potential future cost data. Those kinds of things can be helpful, not necessarily required, but they can, that's more fine-tuning, I would say, what we can do. Certainly shouldn't hold anybody back.
Right. Now, in terms of, we talked about earlier about the, definition of a middle market company. In speaking to other companies in your field, they typically have a sort of a cutoff between implementing an enterprise system for the larger companies and, more of the SaaS model for the smaller companies. Do you have? Is there sort of a revenue cutoff that you use between that, or is that not relevant for you guys?
Now, one of the beautiful things that we've been able to do with our move to the software as a service model is to bring best-in-class product capabilities, features, and functionality down to the middle market. For us, the middle market starts really at a couple $100 million, probably $250, $300 million, and up is the market that we serve. That's principally dictated by the number of customers that someone has, the number of products that they have, the type of sales channels that they sell through. It's again we're reliant on data, so it's kind of the nature of the data is really what leads to the opportunity that we have. We only offer our solutions as a software as a service. We used to be completely enterprise under the enterprise model, and we were doing quite well. We were growing very well. The problem with that model is the cost of our solutions it's a multi-million-dollar capital item for our customers, and the market opportunity for companies that are willing and able to spend multi-million dollars is not one that grows the market really fast. And so we made a switch back in we'd started it probably in 2006, 2007, but we entered the market in 2009 with our initial SaaS offerings, and we had a little bit of a transition period where in 2009 where we offered both. But there's really no advantage today to try to deploy on-premise. It's much cheaper to go to the SaaS model. It's much faster to go to the SaaS model. There's no downside from a security or any of the other issues that used to be an issue 10 years ago. There's best-in-class SaaS security applications in the marketplace today. So there's really not a downside, and the beauty is it's opened up a whole new opportunity for us with tens of thousands of potential prospects for us by getting into the mid-market.
Sure. Now, and it's amazing how the cloud has sort of changed everything. I mean, that SaaS model and the cloud sort of go hand in hand, don't they? In terms of an implementation process, then, what does that look like now in terms of time spent in implementing? Because I would think that there's the implementation process for each company is going to be fairly unique.
It's actually the implementation cost is a little bit unique, but it's in comparison to the old model. It's a rounding error today because we're in full control of the infrastructure and the architecture around that complete deployment. The interesting thing about the SaaS model is that like I said, 6-10 years ago, companies were much more reticent to let data, particularly pricing data, outside their firewall. And with the maturity of the cloud and the maturity of security around the cloud, in many or most cases, the security offered today is better, as good or better than what most companies have on premise. So that's one thing that's kind of opened the door for more companies to or at least more companies be open to letting their data outside their firewall. The second is, frankly, and this is one of the things I talk to companies about, is if part of their overall business strategy is to be innovative in any way and to use third-party technology to do so, they're going to have to get comfortable letting data out into the cloud because there just aren't software startups that are doing kind of next-generation applications that are built for the enterprise model. It's just those kind of companies aren't getting funded. So it's not a matter of if, it's a matter of when companies are going to be open and pushing to the cloud. And frankly, today, even compared to 2 years ago, we just do not see many companies that have that issue anymore.
Interesting. Yeah. Well, I mean, you guys obviously were ahead of the curve in that respect. I think Barrett had mentioned to me that you were the first in your class to actually go to the SaaS model. Is that accurate? Am I remembering that right?
That is correct. And for the most part today, we're still the only one. There are some other companies that have analytics that they will allow into the cloud, but in terms of the optimization, whether it's particularly around pricing optimization, we're still the only one today.
Well, I mean, since it sounds like then there really is no distinction in your offering between middle market companies and larger companies, since it all is sort of the SaaS model, I assume that, well, first of all, is that true? It's pretty much the same offering?
The offering is essentially the same offering. The setup may be, depending upon the number of systems we have to integrate into or any particular nuances that might take place for how the sales force would consume our prices or our leads. That may cost a little bit, but again, in the overall scheme, that's a rounding error in terms of tens of thousands of dollars instead of hundreds of thousands of dollars in the old model.
Right. Well, in terms of the benefits that you guys see, I mean, can you give us some examples of, sort of quantitative impact on sales, margin, bottom line, et cetera? Yeah,
on the pricing side, we we generally believe that we can drive an additional 1% in revenue, 1% of revenue down all the way through from a margin impact down through a company's P&L. So that could be anywhere from 10 to 20% margin improvement, depending upon what their gross margin are for a particular company. So these are it's a big opportunity. On the sales max side, which is again driving its leads for cross-sell and for retention purposes, we generally do an overall assessment before we engage with a customer, and we find about 10% of revenue as an overall lead opportunity. So then the question is, which is obviously a huge number. If you're $250 million company, it's $25 million. So if, what we're typically seeing is in the first year, companies closing anywhere from, 25 to 35% of that in the first year. So, you can work the numbers on that. So for a couple $100,000 investment, you're generating tens of millions of dollars in additional revenue.
That's pretty exciting. I mean, do you guys specialize in any particular verticals, or are you more of a generalist offering?
Well, we're all B2B, and within that, our customer base is, I guess, dominated by manufacturers, distributors, and industrial service type customers, which would include equipment rental companies, things like that.
Sure. Okay, so it's a pretty broad-based thing, but it's B2B. I mean,
exactly.
I guess that's the major vertical, okay, or segmentation. This is a question that every time I think about this kind of industry, the pricing software industry, I always think it's kind of strange because you can have a company, a manufacturer that is using this to sort of find the right price and maximize sales and margin, but on the other end, you could think that companies that are supplying them could be doing the same thing to them. And I often wonder if a purchasing agent should be using this in reverse, if you see what I mean. Gathering the right information in the marketplace so the purchasing agent can negotiate properly. Is that something that happens, or am I just imagining things?
Well, it's not. You're not the first person to bring that up. We've had other companies that we've talked to about that. Margin Max today is setting prices based on what the market opportunity. So using market external, the data that you're getting from your external interaction to drive those prices. So we're more outbound. There is some. You may be talking about a future opportunity in terms of some of the things that we have in the research and development aspect right now, but it's probably the way I think more about that is it's an interesting point in that procurement over the last 10 to 15 years has been armed with technology. In a pretty heavy way, and they've used it to beat down vendors significantly in terms of price. And so, essentially, this is a way to start to arm the sales side of this with how to go back and define those customers, and for which products for those customers do they have an opportunity to move price on, and give them some ammunition to combat some of the activity that they've been fighting for years with on the purchasing side.
Well, what occurs to me is that the more successful you and your fellow pricing companies are, the more transparent pricing will become, and the less important pricing will become, and it will actually then revert back to quality, right? Because I mean, you're in many ways, this kind of technology is removing pricing imperfections from the marketplace, right? You're optimizing pricing on both ends. I mean, both the buyer and the seller then know what the price is. Now, obviously, that's a moving target all the time, but I just think that's interesting that ultimately pricing will become less important and quality and service will become more important. I mean, does that make sense, or am I thinking fancifully?
Well, I think if a marketplace was stale, I think that's the way it would work. But there are so many dynamics that are constantly changing in the B2B space, whether it's costs, whether it's economic conditions, whether it's new products, whether it's new competitors, whatever it is, there is a movement. Data continues to move relatively rapidly, and it's beyond the capability of a human being to keep up with. And that's really what optimization systems do, is to keep track of what's taking place and to enable companies to take advantage of areas where they have those opportunities. I mean, in B2B environment, it's not unusual for a single sales rep to have over 100 companies that are his prospects that he's trying to take care of, that are existing customers that may be buying on a regular basis. In some cases, maybe thousands of customers. And there's just no way for him to keep track of who's buying what and to analyze what one customer is buying versus what somebody in a similar business to that customer is buying, and why they're not buying the same products that they should be from an attach rate perspective, those kinds of things. So, I mean, I think if anything, the world is getting more complex instead of simpler, and the need for solutions like this are going to become just a normal part of business, just like an ERP system is today.
Sure. So what's next for Zilliant? I mean, you're obviously growing very rapidly. Where is your growth sort of going to be? Primarily North America? Is it going to be global? What's next for you guys?
Well, on the distribution side, we're global today. We do quite a bit of business in Europe. We're beginning to get into Asia, so we'll see more there. But so there's plenty of, in terms of prospects, there's plenty of just growth organically in terms of what we're doing. On the product side, one of the neat things that we've done is build out an optimization platform that we can leverage to introduce new offerings in the marketplace on a relatively consistent and a relatively efficient basis. So that we use the same platform for both Margin Max and Sales Max. So we have other offerings in the development phase, and I think over time you're going to continue to see us come out with new offerings. That there'll be, the consistent thing is they'll be data driven. We'll be optimizing data for specific uses, and those answers will be implemented into whatever functionality we're trying to optimize. But we're generally focused. Obviously, we're going to continue to be focused around B2B, and we're going to continue to be focused around improving the sales and marketing operations.
Great. Well, at this point, I typically allow the interviewee to say whatever they want to say. So if there's something you want to get across to the people that listen to this and read about it, now is your shot.
Okay. Well, thank you. First of all, thank you for having me. It's been a pleasure to talk to you. And I would just urge companies to venture and to look at their business. And many companies think, our data is too dirty, we can't do anything with it. And there's a lot of opportunity to be had with 80% of the data that a company has. Data does not have to be perfect to begin to get some real significant measurable returns off of the use of that data. No company has perfect data, and to some extent it's a journey, so that you get started and you begin to get and reap rewards from optimizing that data for pricing or for lead generation. And as you do that, then you start to get better and better data, and it continues to help refine the system and continue to help improve your overall operations. So there shouldn't be anything to hold somebody back. And there's easy ways to get started, and there's low-risk ways to get started to make sure that the solution pays for itself as you move forward. And so, I think I've been in the software space for over 20 years, and these are the most impactful applications in terms of overall helping a company's overall performance that I've ever been involved with. Very tangible, measurable benefits. So I just urge everyone, whether it's us or someone else, to get going, because it's a great way to leverage the investments in infrastructure around ERP and the CRM systems and the supply chain systems that companies have spent millions and millions and millions of dollars on over the last 10 years. This is the best way to continue to reap the rewards for that.
Be sure to check back for future editions of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.